With today's rapid rising of housing prices in today's market, borrowers are finding it harder and harder to qualify for a mortgage. And co-signing for a mortgage is a strategy that actually helps borrowers qualify for that mortgage. But what are the repercussions of co-signing for someone's mortgage? In this video, I'll be going over the implications of being a co-signer for someone's mortgage. Welcome back, guys. It's Tom here from Off Mortgages. Thanks again for tuning in, and I'm happy to have you here joining me for another video. If you do like the video, please feel free to go down below and hit the like button, and as well as subscribe to the channel. That way more people can view the channel and we can help grow the channel together. So if you factor in the rising housing prices, the stricter guidelines to getting approved for a mortgage, the new stress test rule that just came in, and as well as stricter rules for self-employed individuals, or maybe you have slightly bruised credit, getting qualified for a mortgage isn't an easy task. There can be various reasons as to why you may not qualify for that mortgage. It essentially all comes down to two qualifying ratios. I'm not going to go into that into too much detail in this video. We're simply going to focus on the co-signing aspect of things. But when this does happen and you don't qualify for that mortgage, one of the simplest ways to have those ratios come down or fix the problem at hand is to have someone co-sign for that mortgage for you. If the co-signer has great income and their credit checks out as well, then they can ultimately help you secure that mortgage. But how does this affect the person co-signing? As a co-signer, you're also put on the title as well as the mortgage with the bank or lender. When you are put on title, you're usually put on title with as low as 1 to 50% ownership of that property. So going forward, as a co-signer, if you're filling out any application for credit, that property that you co-signed for in the past, those mortgage payments are taken into account, as well as the property taxes and condo fees if applicable. And it doesn't matter if they have 1% or 50% ownership in that title, all those expenses are still taken into account. So this obviously poses a risk to the co-signer because that property that they co-signed for in the past can hinder their approval of any application they're filling out in the future. So to give you an example, let's say on your personal property, your current mortgage is coming up for renewal in 3 months from now, and you want to explore your options to see if there's a lender that has a lower interest rate. Well, let's say you do find that lender and you want to get a new mortgage with that new lender. Well, now you're going to have to get approved and qualify, and all those payments on that property that you co-signed for are going to be taken into account. So you run that risk of not getting approved for that mortgage. So worst case scenario in that specific example is that you don't get qualified and you end up having to stay with that lender that you currently have and sign for that renewal. Co-signing for a mortgage could also affect the following: buying a rental property, refinancing, co-signing for anyone else, buying a car or a boat, applying for a home equity line of credit or even unsecured line of credit. Some other disadvantages of co-signing include damaging your credit score. So if that person that you co-signed for misses payments on their mortgage, that will affect your credit score as well. Another disadvantage is if that same situation happens where the mortgage payment isn't getting paid, then you run the risk of possibly damaging that relationship with that lender for you in the future. So let's say it's a big bank that has lots of great products and features, but you have that co-signed mortgage that person is not paying off the mortgage payment, then that can possibly damage the relationship between you and that lender. And say in the future for your own personal property, the program within that bank is the best fit for you. Well, now you may not have that option to get that for your own personal mortgage. Now, having said all that, co-signing for a mortgage may not affect you at all, and you can actually be helping a loved one out with home ownership. If there's an exit strategy or even a timeline for how long you're going to be co-signing for, this may put you at ease to make the right decision. Now, this isn't a video to scare you away from co-signing. In fact, a lot of people do co-sign, and it's a very common thing to do in today's market. However, it is a video to help you make an informed decision. So if you are debating on co-signing for someone, just think about the future credit that you might need access to, as well as how long you're going to be co-signing for, and what happens if payments are missed. So that's it for today's video. I hope you guys enjoyed it, and I'll see you guys on the next one.